Hello, this is Taj. Today we'll be going over the gold trade that I took in the Asian session and ended in New York session. This went on for about 12 hours from 9 p.m. Eastern to 9 a.m. Eastern. 9 a.m. Eastern. Right, so let's go over why I actually took the trade. Right, so looking at the daily chart, saw that we were in bullish uptrend, of course, and I noticed the price volume imbalance right here between this bullish candle and this bullish candle, price volume imbalance. And I noticed, well, I mapped the previous day's high, and I mapped the previous day's low. This was also the same range for the 4 hour candle range, right? So this is candle range theory being applied. Both these daily candle range and the 4 hour candle range is the same. So that's quite powerful right there. What we want to see is liquidity being taken from either sides. My bias was initially bullish, therefore I mapped my setup accordingly, noticing a break of structure to the left where prices broke above this high and I expected a pullback. I saw this as correction, of course, orders being accumulated. Applying the CRT strategy though, I was waiting for the previous day's low, which is the low of the candle range, to be taken out. The liquidity, I need to see that swept. On the 5 minute, that's what occurred with a pin bar. That was my actual confirmation, right? When I saw that closed, I went to the 1 minute and entered aggressively, really, as the 5 minute was actually my early confirmation. Another confirmation would have been the inversion fair value gap break, right? So notice this candle, this big candle that swept previous day's liquidity as well as the CRT low. It left an inversion fair value gap, and prior to that, you know, it swept liquidity below as well. So lots of liquidity being taken and created an inversion fair value gap. The confirmation was this bullish candle, strong bullish candle, a single bullish candle, very important, a single bullish candle breaking directly through this inversion fair value gap and closing above this candle range high, right? Candle body close, right? That would have been the entry for confirmation on the 1 minute, right? Because this shows volume and stop loss below the low, of course. But going with my entry using the 5 minute pin bar, my stop loss was below the previous day's low, some couple of pips, about 4 pips. And I targeted the high of the candle range. The 50% would have been good enough, but seeing that I was following the daily trend, and the method of break of structure, usually targeting highs, all that, it was extra bullish for me. So I was just targeting the high, really. So we got 1 to 8 actually. All right, so a couple pips below here. All right, 1 to 8 in this trade. And this is why realistic targets matter, right? As soon as the previous day's high got swept, it reversed. Complete reversal. So this is also a pin bar. So the same thing that happened here for the bullish setup happened for a bearish setup. Swept liquidity, extra push up, pin bar, right? And then it proceeded to fall, and it just melted, you know? All of these buyers, if they hadn't set a stop loss or TP, you know, rest in peace. I'm so sorry. Well, that's the trade for today. And we'll be going through other trades in the future. Thanks again for watching. See you next time. Continue to trade responsibly. Bye bye now.